Hello everyone, this is Henry from Elliott Wave Analysis.com. So in this video, I'm going to show you a clip of the past live trading room. We do live trading room every single day at 7 o'clock, 8 o'clock, depending on which group that you subscribe to. And here is a trade that we sort of recommend or give the idea to our members on the 3rd of January. This is the chart of the copper on the 3rd of January, in which we are looking for copper to hit this blue box, which we define as the inflection area. This is a 7 swing structure here, and we told our members to this is a pretty high probability that we can at least get the risk bounce or even extend higher. So we told members that this is something that we would like to try to buy, to go long from this area. And this is the current chart right now in copper. Now obviously we hit this blue box and then starts to rally as expected, and we give a target of 2.87. so actually we hit our target already now. So the long position has been closed. It gives us around 2.6 reward versus risk, so which is pretty good. So in the next few minutes you will hear that part of the clip in the live trading room on the 3rd of January, in which I would analyze this pattern right here and give the recommendation to the members. Hope you enjoy it. We bought it here yesterday. It bounces 50%, allowing us to take partial profit and move stop loss. It goes to new low, so in the rest of the position break even. Now once it broke to new low, you know that the next equal leg is going to be the next buying area, right? And now we are in the buying area again in copper, right? Now even if it is not okay, take a look at this. What do you think of okay, we are calling this as a double zigzag, right? We're calling this as a double zigzag. Now obviously if you take a look here at the RSI here, take a look at the RSI. Now this one looks to be in the biggest bounce, right, in the RSI, right? So I mean, you might be tempted to label this as a 1, 2, 3, 4, 5, right? Can you label this as a 1, 2, 3, 4, 5? Maybe, right? Maybe. I mean, some of you might say yes, possible. But then if you take a look at the RSI, okay, that looks like this is really your connector from the peak, right? Because this is, you know, the biggest bounce here in the RSI. So it makes sense. I think it is better to be counted like what we are proposing here. A, B, C ending here. This cycle ended here. This is your connector. And then you got another leg lower. Now if you agree with this assessment, okay, if you agree with this assessment, nothing is 100%. I'm just explaining to you the sort of like the method of thinking, right? And then if you agree, then you can make your own decision, right? That's the whole thing, right? That's the whole point, is not to force you to do something, but to explain to you the line of thought, right? So if you agree that this is a better connector from the peak, then this is a 3 waves. It doesn't look like a 5 waves to me. It is a 3 waves, right? So if this is a 3 waves and you agree this is a better connector from the peak and it is not 1, 2, 3, 4, 5, then this is your hedging area, right? It's a 3, I mean it's a 7 swing double zigzag. So this is going to be if we are correct, this is going to bounce in 3 waves at least, right? It is going to bounce in 3 waves at least from this area. Now what might go wrong for us here is if this is actually 5 waves like this. If this is 5 waves like this, let's say 1, 2, 3, 4, 5. Now if this is a 5 waves, then yes, we can be you know, stopped out. But take a look at this 4 and this 2 doesn't look to be distribution wise, doesn't look to be nice, right? I mean, this is way too big for a wave 4 comparatively speaking to the wave 2, if you want to label it this way, right? And that's why the RSI also seems to be confirming that the better count is going to be not like this, not like this. Right, so this is the only thing that maybe can detour, right? It can be, if it is doing something like this, 1 2, and then suddenly we do a 3, and then it keeps extending lower in the width 3 to 1.618. That's the only thing I can think of. But again, we are just in the business of probability, ranking which one, trying to find out which one has a higher probability. And in my view, the higher probability is not 5 waves. It is a 3 waves here. This is your connector. It's another 3 waves. Therefore, this is your hedging area. Yeah, leading diagonal. But look at this. If you look at it, this one, it doesn't. If this is really wave 4, it shouldn't break above this wave 2. The momentum is breaking above the wave 2, right? So it's as if, think about it as if the price breaks like this, right? It cannot be, right? It cannot be. So so again, probability wise, it looks better as a 3 waves, and therefore I'm expecting at least 3 waves bounce from this area.